All right, back to work. Back to work. Break time is over. Let's make some more money this week. I missed you guys, by the way, last week. What the heck happened with these markets? The markets are messy. Charts are ugly right now. Everyone's waiting for the FOMC announcement coming out on Wednesday afternoon. But I'll tell you, though, if you look closely, there are two, I think, pretty simple clues that are tipping me off to where I think the best winning trades are going to be for tomorrow. By the time we're done tonight's video, you'll have a roadmap to make some money tomorrow as well. And before we jump in, get our hands dirty in these charts, talk about my favorite trades for tomorrow, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out, give me a holler down in the comment section below. Thank you so much for sticking around, tuning back in. I missed you last week once again. Could be back here as always on the YouTube channel. Charts are all ready to go. I get the Nasdaq triple Qs are ready. The S&P and the SPY is ready. There are two important clues right now telling us where the best entries are going to be for tomorrow. One of those clues is right here on this 60-minute time frame. We have a bullish directional bias right now. Got a big old channel there on the S&P. We are bullish into a trading range on the Nasdaq. I do realize it's been a couple days here of moving lower on the S&P, moving lower on the Nasdaq, but it's pretty obvious though our overall directional bias, our directional filter as we call that in our trade room, is bullish overall on both the S&P and the Nasdaq. That's one of the two really important clues. I have one more important clue. Even more important, I think, are on our tick charts here, and we'll grab that in a moment. Before we dive into the tick charts though, and talk about the next important clue here, let's check our schedule for tomorrow because you might not be aware of this. There is no major news on the schedule for tomorrow. We get housing starts tomorrow, of course, at 8:30 Eastern time. That's not the big concern for tomorrow. Tomorrow is all about the Bank of Japan announcement happening overnight. The Bank of Japan, I won't go into too much detail on this, but the Bank of Japan has had negative interest rates for over 7 years now, and they are potentially going to be increasing or hiking their rates overnight. Expect around 2 o'clock, 2:30 Eastern time overnight. I don't usually track the Bank of Japan, but everyone is talking about this stuff right now. So that's definitely something, a wild card I'm watching here overnight. Again, it'll be at 2 o'clock in the morning Eastern time. So tonight in the video, we'll talk about some game plans for some big moves up, some big moves down in the response to that Bank of Japan announcement here coming at about 2 o'clock, 2:30 Eastern time here overnight. There's no major news here for tomorrow. Once we hear from the Bank of Japan overnight tonight, pretty much everyone shifts their focus to the FOMC announcement coming on Wednesday afternoon. You better come back tomorrow night because we'll definitely talk about the game plan to trade one of the biggest announcements of the year on Wednesday afternoon. But first though, let's get ready for Tuesday, right? Back to our charts. We know the Bank of Japan overnight. It's good to know when that news is coming out. But as we know already, right, we make our money on the charts. Let's now go my favorite trades here for tomorrow. We'll begin, of course, with the S&P and the SPY, wrap things up, of course, on the Nasdaq and the triple Qs. We talked about two important clues right now that if you're paying attention, they pretty much tell you where to find the winning trades for tomorrow. One of them is this overall bullish market here on the 60-minute, but I think the most important clue is on our tick charts right now. We trade off tick charts in our trade room. Tick charts, I think, make everything easier if you want my opinion. This is a 7,000 tick chart. You can see linked up there in the upper left-hand corner. And if you're watching for the first time right now, this is the 21 EMA. It's pretty much the only indicator we use to find lots of winning trades each morning in our members trade room at 8 o'clock Eastern time. There's one really important clue on this tick chart. It's actually two important clues. It's two trading ranges. We finished up the week last week with a range on Friday afternoon. We saw that blast higher when nobody was watching, right? Sunday night, we're all watching that tennis tournament out here in Indian Wells. The market rips higher overnight and goes right into a new trading range overhead. Now, if you're taking my free video classes right now, you know how ranges work, but let's go over this for the rest of us. First of all, is the range below us. Anytime we see a range breakout, we love to get what we call breakout pullbacks. If I had to guess my favorite trade for tomorrow? My favorite trade for tomorrow would definitely be a breakout pullback. Now, breakout pullbacks are very simple in theory. There are 3 different variations of entry tactics we'll talk about tonight. The second range overhead is also very important because we know that ranges love to rotate. We pop up into that trading range, and now for the most part, we've got this beautiful channel coming off of that low you'll see right there. But the bottom line, though, is this range wants to rotate, right? They want to finish off what they call pendulum swing, going higher and potentially take out those major highs up there on the S&P at 57 and a quarter. So there's a lot of ways to make money on this. Right now, let's talk about my favorite trade, which is that breakout pullback area for now. But later on in the video, I think there's a lot of ways to make money as we go higher, but you got to be careful because as we go higher, this could be ripe for a reversal and a reversal back down, and plenty of ways to make money no matter what we get for tomorrow. So let's break it down first. How do we trade a breakout pullback? Well, remember, I have no crystal ball. I don't know. We may bounce off that area. We might bounce off there. We may go all the way down to that big low. With the Bank of Japan announcement overnight tonight, you got to kind of be open-minded to any of these pullback areas. So I can't predict tomorrow, right? What I do know, though, is we're overall bullish on the 60-minute. Markets love to break out and pull back. So what's the best way to time the entry? The best way that I know to time the entry is to wait for a pullback. Don't try to pick the bottom on this. Wait for the pullback to the moving average, 21 EMA, and wait for those bears to come in and commit to it. Once those bears commit, once they try once and they try twice, now I know, we talk a lot about this in our free video classes, now I know where the stops are. Now I know where their pain is. I know a lot of you guys make money with these failure patterns. This would be a failure. A 2-try failure will buy failures off support levels below this trading range. Now remember, where does the market want to go? It wants to go back up into that trading range and rotate going higher. So as we make our run going higher, this one type of entry pattern we always look for, and that is called a bear trap, right? So buy a bear trap as it runs higher. Watch closely how this works. It's a higher high in price and a move right below that prior swing low. So again, I love the idea of buying a breakout pullback. I don't have a crystal ball as far as where or how low that pullback will be, but as we start pulling back overnight, trap those bears in that 2-try failure, bears once, bears twice, buy right into those stops, and then as we're running higher, watch for that higher high in price. It'll be a shallow pullback right there, higher high in price, right? And of course, those bear traps as we make our way back, take out those highs and potentially up into those big all-time highs we mentioned a moment ago. One more variation of this would be, sometimes what happens is we'll get that deep pullback, we'll get those bears trapped in here, we'll get a nice easy winner going higher, but then sometimes what happens is the underbelly of that range, remember ranges love to break out pullback, so sometimes the underbelly of that most recent range will hold and the market will shoot back down and basically do it again. We call these double bottom reversals. Do not confuse a retest of that low with a reversal, right? We call these double bottom reversals. I'll use the exact same technique. We trap the bears in once, twice right there, get underneath that moving average, trap those bears once, bears twice. Because think about this, right? If we have sellers come in, if the bears come in and short off that breakout pullback, they're going to be taking the majority of their profit off where? At that low. These are rookies getting short down here, right? These are rookies selling lower. These are not professional traders. Professional sellers will sell nice and high, right? So we trap the rookies in. Again, I like to use those 2-try failure patterns we talk about in our free trading classes. 1 try, 2 2-try, run those stops. And again, we know anytime we catch those bears trap like that, we know as we go higher, it's always going to be that same entry pattern, that higher high in price and that move right below that low. And of course, in the free video class, we talk about the entry tactics we use, right? Getting that strong green signal candle, closing firmly above the 21 EMA. We call that the double bottom reversal. All it is a move lower. We pop up, we get our 1-to-1, but again, they race back down again, retest the low, and we literally do it again. Failure into bear trap and potentially all the way back up now into that trading range. Now, let's slow down for a second because I know that most of you guys and gals watching tonight's video, you've taken my free video classes, you've learned failures, traps, range rotations, breakout pullbacks. But if you're watching for the first time right now, this might be a brand new language for you, right? But don't you worry. I teach all these entry patterns. I have hundreds of real examples, all taught in a lot more detail in my free trading classes. I'll do this. I'll put a link up top here for you. In the upper right-hand corner, hit the little link that popped up there, upper right-hand corner, and take that free trading course because the strategy you'll learn in that short video series will teach you a stupidly simple trick we use in our members trade room to know exactly where the best winning trades are going to be that day. Then I want to help you start making money on your own. I'll teach you 4 of my favorite entry patterns, help kickstart you making money on your own. Guys, the markets are way too good right now not to be making consistent money. If you're missing the best trades, if you're struggling to qualify for a funded account at Top Step or Apex, hit the link up top there. Take that free course. It's perfect for someone trying to make the jump into full-time trading. And also be aware too, if you can't get the link up top there, I'll put all the important links we talk about tonight in the description of the YouTube video. Put the free class links down there. We trade together every morning at 8 o'clock Eastern time. I'll put my trade room membership links in the description of the YouTube video. And also too, I post a lot of updates on Twitter every day. If you're on Twitter, give me a follow. All the details, the description of the YouTube video. But now you know where to learn more about, again, breakout pullbacks, timing the best entries with that 2-try failure. And then as we run higher, grabbing those bear traps, buying as low as we can, right? That failure in a trap combination. Again, if they do roll over, do it, right? Do it again, right? Do it again. Now, here's one more variation of this. I mentioned earlier that, again, I had no crystal ball, right? So I always want to make sure I can have game plan or visualize different variations of this. For example, I love the idea of this pullback and trapping bears in below the 21 EMA. It's an easy way to make money in most environments, especially in range markets when you get the bears trapped short in an overall bull market. But you know what? Sometimes we don't get that run and that trap. Sometimes there's so many buyers down here, it just V-bottoms off of that low. We're going to boing right up off of that low. These can be frustrating because I want the entry nice and low, but I don't get the trigger, right? It doesn't give me a good signal to get in long. There's no bears who are trapped in. And what happens is when you get those V-bottoms like this, right? When they V-bottom off that low like this, at least for me personally, what happens is it'll begin grinding and going higher like this. And if you're anything like me, that little voice in your head will start saying, come on, bro, get in, man, right? Get in. You're missing, right? You're missing the move right now. Once that little voice in your head starts to talk trash to you, right? That's when I know it's time to draw that trend off the highs, mark it off that low, look left, find some prior swings, and you want that first test off the low of that channel. We call these V-bottom reversals. They are definitely not my favorite trade in the world. I would love to be buying down here, but again, I want to make sure I have a tool for no matter what the market throws at me. If we V-bottom off that low tomorrow, V-bottom and grind going higher, again, you know what I'm talking about, right? That voice in your head will start talking to you going, come on, man, get in. You'll get itching for it. Once that voice chimes in, now you know, stay patient, mark off that trend line, find that channel, and this could be any of the entry patterns. It could be a trap, like I'm showing you here. It could be your classic failure into pullback combination, get underneath the 21 EMA, a failure into pullback combination, a failure into bear trap combination. This will make a lot more sense, of course, once you go through the videos in the free trading classes. But again, any of the entry patterns you guys are learning in the free video course, the most important thing is I want that first test, right? The first test off the low of that channel, because the first test is always the best test. That's a pretty straightforward game plan right now, right? Move lower, trap the bears in, keep an eye out for that double bottom back up again. If it V bottoms, well, now we know how to trade that V bottom reversal. There's one more thing though, one more thing we need to keep in mind. We are sitting right now, right on the low of that channel, and we may not get that deep pullback. I want to get the breakout pullback, but I don't want to force it, right? So what happens, right? What happens if all we do is bounce off this level? Be aware of what I call a shallow pullback trap. Again, I want to go lower. I want to trap those bears in, use their stops to fuel that move going higher. But if we make a run lower, or if we start going higher here, keep an eye out for one of these entry patterns. It's basically a bear trap pattern. I want to do two things. I want to buy as low as I can and trap the bears in, because now I can use their stops to fuel this move here. This is what I call buying a shallow pullback trap. It's basically buying a shallow pullback, again, comparably speaking to the pullback area down here, and I want to buy as low as I can. So I want to make sure I'm getting in off a trap setup. So it may go lower and then right back up again. If that's the case, look for that higher high in price, right? And that bear trap going higher here. If we were to begin to rotate and run higher, right? Rotate and run higher. Again, it's a bull market into a trading range. If it was to rotate and run higher, same idea. I want to buy as low as I possibly can because of the threat of that breakout pullback below us. And to do that, we always use these bear traps, right? So during a shallow pullback, I would call that a pretty shallow pullback, considering the situation we have with that range magnet. Buy that shallow pullback, buy as low as you can, bears once, bears twice, and there is that bear trap. And again, on that one, we know where the market wants to go. It wants to complete that pendulum swing just ahead of those major all-time highs. That is the game plan if we go lower, right? Get the variations, the game plans to go for that. Now, what if we go higher? Because I think there are ways to make money to buy it as we go higher, and if we're lucky, we might get a chance to double dip, getting some long trades and some short trades off the high on this. Let's go to the Nasdaq now. The Nasdaq's feeling a bit lonely over there. I see you, Nasty. Let's do this. Nasdaq 60-minute. A bit different, of course, than the S&P. You can see the Nasdaq, of course, is more of a bull market into a trading range. But the most important thing about the 60-minute time frame, don't overthink the 60-minute. The 60-minute time frame has one main goal of mine. That's to give me the overall directional bias. So keep this simple. It's an overall bull market, bullish into a trading range. The most important clues, of course, are always going to be on the tick charts, because again, this is what we trade off every day in our trade room. And it's kind of the same idea here, ultimately the same plan or the same structure we had on the S&P. We had that trading range on Friday afternoon. We break out of that range. We have to think everybody wants that breakout pullback off that previous trading range. And then recently here, this trading range on the Nasdaq, you'll notice it's a bit different than the S&P. It's a bit lower on the charts. We measure the amount above, we project that below, and man, oh man, what a beautiful spot right there. This whole area really down here looks to be a great spot there for really any of the trade patterns I talked about a moment ago on the S&P, right? Basically the same game we mentioned on the S&P can be applied to the Nasdaq. Now, if we do end up rotating and running higher here, this is a very strong run higher. Anytime we see a strong move in one direction, we always expect to get that two-legged pullback and that retest of the high. So we know the market wants to go back and take out that high at 18,381 and change up there. And of course, the major highs are quite a bit higher overhead on the Nasdaq at 18,684. If we start running higher here, and again, we have the Bank of Japan announcement overnight. If we begin to run higher, I mentioned this a moment ago on the S&P, my goal will be to buy as low as I can. And to do that, I'm going to always look for a bear trap. It's a higher high in price and move right below that low. What this does is this traps in the bears, right? It gets the bears getting short. It makes them commit to the short side. It then allows me to buy as low as I can and basically punch out those stops to fuel the move going higher. These bear traps and bull traps, we do a lot of bear traps right now because we're overall bullish on the 60-minute time frame. You need to make sure you learn this in the free trading classes because they are literally everywhere. Once you see and learn traps, you'll never unsee them. They become a very easy way to consistently make money. So if we do end up rolling higher here, if we do end up running higher, the game plan is going to be buy as low as I can on the way back up to retest that high. And that means I'm looking for those bear trap patterns. Now, if this thing really gets cooking, right? If it really gets running and going higher, what do you think the next entry is going to be? Remember, we talked about this earlier. Anytime we see a range breakout, we expect a breakout pullback, right? Now, breakout pullbacks are pretty simple ideas, right? I don't have a crystal ball, though. I don't know how far that pullback will go. Usually be somewhere right around those prior highs. But to time the best entry, all I do is I wait for the pullback. I get down around where prior levels of resistance now become support. I don't try to pick the bottom on this. I simply wait for the bears to come in, let them try a couple times, use that failure into pullback combination pattern we talk so much about in the free video course, or use that failure into a bear trap pattern, higher high in price, trap below that low. And one really cool thing about breakout pullbacks is that the amount of the breakout leg, that's the measuring leg, I can now use the size of that breakout leg and project that now higher for a target. You know, one thing we talk about a lot in our morning trade, morning with members, is if you want to make more money, don't trade more often. Just get better at holding on to your winners a bit longer. Once you learn how breakouts work, range breakouts, again, breakout pullbacks for the entry, but then again, you can make a lot more money. Don't simply cut yourself off short, or don't cut the winners too soon on this. Failures and bear traps, take some off at the retest of the high, but always, right, always think about that breakout leg, pin it down at that low, and use that now for your measuring leg. Whenever ranges break out and pull back like that, I always look for a measured move, and that will give us an idea of where to leave that final target. Again, if you want to make more money, don't trade more often. Get better at squeezing more money out of the winning trades you're already in. That would be an easy one for a breakout pullback. The next one, too, is we call a pop and grind breakout. Now, pop and grind breakouts, we actually saw a pop and grind today on the Nasdaq. It popped up, grinds, find that channel, right? And we're buying off the low of that channel. Pop and grinds are very, very common. They look a lot like that V bottom scenario we talked about on the S&P. Remember earlier in the S&P, we talked about if we V bottom off that low and it grinds, that is ultimately the same basic principle. We draw a trend line off the highs, we bring it down off that low, we look left and find that prior swing. We want that first test off that low. This is exactly the same idea in a nutshell. If we wind up popping higher, and again, BOJ overnight with the Bank of Japan overnight, tough to tell what's going to happen off that, but I do want to make sure we're ready for if we do see a strong run going higher. If we see a strong run going lower, we pretty much know how to trade that already. If we go higher, though, it'll either be a breakout pullback, right? Failure into bear trap combination. We mentioned that a few times already. Or it'll be a pop-up into that channel there. It'll be a pop-up into a new pop and grind. And once that happens, again, what will happen is you'll begin to get a bit frustrated with it, right? I always do. Whenever it pops up and grinds like that, I'm like, come on, man, pull back from me, right? It can be a bit nerve-wracking to patiently let this thing set up for you, but stay patient, mark off that high, bring it down off that low. And again, as always, I look left and look for a prior swing low that lines up nicely around the low of that channel, right? That's usually where the best entries are going to be. And of course, I'll keep things simple here tonight because I can't go over everything here in these videos. But this could be a bear trap. It could be a failure pattern, a pullback combo. Again, any of the entry patterns you guys are learning inside the free trading course, right? That'd be your pop and grind breakout going higher. Now, let's face it. We get a range here. What if we make a run back up? How would I sell off the high right now? Because I'm sure some folks right now are saying, no, man, we're not getting a big move tomorrow. We get FOMC coming out on Wednesday. We have a big range right now on the S&P, on the Nasdaq. They love to rotate back and forth like this. So there probably is going to be some ways in which we can sell this and go against the overall directional bias. There are two ways whenever we are bullish overall and I want to sell on the fast time frame as I go higher. One of them is called a crown reversal pattern. It's basically a bull trap pattern. It's buyers try once to keep it going higher, buyers trying twice to keep it going higher. We can all agree, right? This is not the place to be buying. Right? I want to buy on the way up to that high or wait for a break through the high and then buy the breakout pullback, right? So I'm not going to buy right into that high. This is where rookies buy, right? This is a rookie mistake, right? Buying right into that high. If I can get rookies once and I can get rookies twice here now I know where their stops are. Now I know where their pain is. Now I know where the fuel is I need to run this thing back down again. Make sure you pay attention though. It's a lower low in price and a move just above that prior high. That's why I said before, a crown reversal, right, is technically a bull trap. It's buyers once, it's buyers twice. That lower low in price combined with that nice strong red candle closing firmly below 21 EMA. A lot of examples of those inside the free video class on the website. So make sure you check that out when you log in. But that will be one way in which I would short this thing off the high. Another way we saw here a few hours ago where it pops up and V's and then grinds back down like that. That is another example of a V top, right? Or a pop and grind. That's exactly what happened, right? As it came off that high right there. So now imagine we go up. There's so many bears up here because again, big range there on the 60-minute time frame. We don't get the 1, the 2, and the crown reversal. Instead, what happens is you get one of these guys, right, where it pops back down and grinds back down again. You know where the market wants to go, right? Because again, that trading range wants to rotate, right? It wants to rotate back down again and possibly take out that breakout pullback zone and then right back up again, right? It may be an easy 1-2 punch there, short the high and then buy it on the rebound. But again, long story short though, right? If we run up like this and get whacked back down and begin to grind and grind and grind, it's easy. Well, I shouldn't say it's easy. It's simple. It's not always easy. The hard part is don't chase it as it goes lower. That's always the hard part, right? That voice in your head will make it difficult not to chase it running lower. Stay patient, mark that low, mark that high, and again, just like we saw over here, right? Mark that channel like that, grab that first test off that high there. That's exactly where, and again, this could be any of the entry patterns. It could be a bull trap, a prior swing, buyer failure pattern, a pullback combination, a strength move if there's enough space down there, right? We'll talk about that in the video course. So possible strength trade off the high there as well. And again, I would not be upset whatsoever if we went up, bull trap off the high, ran all the way down, bear trap off the breakout pullback. That's how ranges work, right? This is how range-bound markets work, and ranges make perfect sense ahead of the FOMC announcement coming out on Wednesday afternoon. Right, guys? That's the plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern Time, come out and trade it with me. The easiest way to start making consistent money in the markets to learn and trade along with me every morning in our trade room. I'll put all the important links, the free class links, the trade room membership links. I'll put all the details in the description of the YouTube video. Any questions, any issues, any trouble getting started, don't be afraid to call the office, use email, use Skype, use live chat. We're always here to help out if you guys have questions along the way. Boy, fantastic day today. It always feels good to be back here on the YouTube channel. Hope you learned a bunch tonight. Hope you use this knowledge to earn a bunch tomorrow. And hopefully I'll see you sometime soon, trading along with me sometime soon in the morning trade room at 8 o'clock Eastern time. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye-bye for now.